Good morning, traders. It's 8 a.m. Chicago time on Tuesday, the 7th of December, 2021. This is episode number 2130. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, a risk-on market. We discussed this yesterday. I talked about the very likelihood that we would push higher. That was the primary scenario. I explained the reasons behind it, and the expectation is for a push into that 7350 area, the 46, 7350 area. I'm not going to get into the details of that because we already covered it. This morning, this rally is being led, as you can see in front of you here, by the Nasdaq. Nasdaq up 178 basis points, 283 points, very strong rally in the NQ. The NQ got a little bit beat down. Again, I talked about this in the overview segment using the overview chart in Edge Pro X, showing that it is remarkably weaker than where it was at the beginning of January relative to the other indices. Well, it just caught up. So the tech issues right now are considered a bargain, and they have been bought up. So this morning we've had a pretty decent range, some 300, what is that, 350 points, something like that is the low to high range in the Nasdaq. It's remarkable. Again, the main piece here being a FOMO rally in techs. There were some positive numbers out of China. China released its import and export data stronger. Also this morning, Germany came out with its Zoo Economic Sentiment Index, which actually beat by far, 29.9 versus consensus of 25.1 and a forecast of 26.5. The balanced trade number came out this morning at 8:30, about a half hour ago, for the U.S., and it also was much better than the prior. The prior was $81.4 billion deficit in September. In October, $67.1 billion deficit. The expectation is 66.8 to 66 billion. So overall, pretty positive numbers. Looking at what's on the calendar for today, we have the IBD tip, economic optimism number. None of the numbers coming out today are considered high tier. At 10 o'clock, so we have the IBD tip. At 10 o'clock, we have the API crude oil stock change at 4:30. We get this every week on Tuesday at 4:30. GDP growth out of Japan and current account out of Japan. We also have total vehicle sales out of the U.S. at 7 p.m. Eastern. That's what's on deck. In terms of key earnings, AutoZone, Core and Main, pre-market, those are done. Casey's General Stores and Toll Brothers. Toll Brothers represents the real estate market, the housing market. They're a custom home developer, and that the results from that are relatively highly anticipated. Shifting now. Oh, let's talk about crude for a second. Crude oil. Wow. I mean, crude just did this beautiful test. Let me see if I can show it to you, since we're all trading geeks here. I'm going to show you this test that crude had. I'm just pulling up the chart. Let me float the chart. Crude went down and tested this composite high volume node. This composite high volume node's at 63, around $63. It went to 62.43, and I posted about it in the Head Trader channel on Convergent Trading, and I talked about the very likely push into 74, 75, 75 even, 74, 75, 75 even. Currently, crude is trading right here at 71. So it came up from 64 all the way back up. Just a beautiful touch and turn. And it's likely to encounter resistance in the 74, 75 area. So it's up another 243 basis points today. It's quite significant. Bitcoin, if you follow on Twitter over the weekend, I posted this chart here showing a test of the low volume node, the composite low volume node, which was at 41,700, 41,800, with the expectation of a bounce back to 52,900. If the 52,900 holds, in other words, if Bitcoin pushes to 52,000, call it 53,000, what's $1,000 between friends in Bitcoin? If it holds, then it's likely to turn around and get deep into and towards 33,800 is the number below. If it returns to 52,900 or 53,000 and pushes through, it is likely to pull back for some support at 50, and then the target becomes this high volume node right here at 57.1. So crude is trading very technically, in my opinion, a very interesting trade in there. You might know that CME released Ether futures. I was going to do a quick Ether review, but honestly, it's not. I don't have the time for that right now. So let's look at the S&P. The S&P has had some pretty decent range. The S&P has 69.5 points of range. Overnight inventory is 95% positive. A translation of that means that 95% of the volume in the overnight session occurred above the prior settle. And so the inventory is long overnight. What's interesting about the ES is volume is quite light for such a big move, 248,000 contracts. That is higher than the mode of 228, and it's higher than what we've been seeing lately on calm days, although volumes have been high in the overnight session anyway. But overall, the market is in trend mode in the S&P, and that's where we stand. The point of control is firmly at 4650. A very clear P-shaped profile overnight. We'll look at that here in a second. Let's move into our review segment. And by the way, yesterday, just a quick review here. Yesterday, the primary setup I talked about yesterday was a pullback to 40. Was a pullback to 40 and 38 right in here. 40.38, this is the pullback I was looking for, and I said if it holds that 40.38, which is the line in the sand, then we are looking for it to push to 46.19 with some with a little bit of turbulence at 45.90, 4600. Back at the opening print from the prior session. And then I'm looking for 46.19. Here's what actually happened in, let me close this crude chart because it's throwing things off. Here's what actually happened yesterday. Yesterday, where do we pull back to? 45.39, 45.39 and a quarter. Remember, 45.40, 45.38. Expected support. Look to buy that and push and hold to 46.19. I actually messed this trade up. I got myself knocked out right here. Just stupidly, I got too myopic and started looking at the price action for stops instead of looking at the bigger picture and seeing that actually that was the midpoint and its support at exactly 51.75. just a dumb error. But in any case, we held the 40 and we pushed to 46.11 as opposed to 46.19. I recognize that 46.19 from 45.40 is a lot of range. Is a lot of range. It's about 80 points, and I recognize that. But that's the key price we're looking to hit on the upside within yesterday's range. Beautifully executed by the market. What we had are pushes, nice little flags, breaks, lots of flags, breaks, flags, and so on and so forth. Support becomes resistance, and resistance becomes support. Yesterday, we could see that the IB was right here, and what we had is a box underneath the IB and a box above the IB. And once that broke, we formed a new box up here, which became resistance right there, and then the lower box became support. So very, very methodical trade yesterday. The profile yesterday is singing out loud that price discovery, active price discovery is in process. In other words, the market is actively seeking value and is not actively seeking balance and isn't successfully finding it. So the value area of yesterday is meaningless on a profile that's a multi-distribution profile like this. There is no value. So we do not use the value area on a day like yesterday. We use the value area on a day that has a nice distribution of volume, right? So yesterday finished up in what is a trend day type. It's actually a normal variation day, but given the way the profile is created, it really is a trend day. We did not tag the prior close, prior settle. Pretty aggressive, relatively aggressive buying yesterday, which was expected to continue into today. Let's look at today. Today, the consolidation continues at the open, and then shoom, on the China news, the China pricing news, very strong rally from there, and we've been flagging since. So what we've done is we've moved the overnight point of control and created a very, very sharp and very prominent VPOC, the point of control. And it's going to remain there through the open, and this area becomes this really important measuring stick. The 4650 becomes a very important marker or tattletale for the day. Are we staying below it when we open? Are we staying above it when we open? Do we pull back to it and use it as support after we open? In which case we would have a buy and hold kind of day. Or do we slosh through it, which means that we're building and we're forming balance in that area at the mid-century figure? This is likely to be a relatively noisy open, so be careful. Do not use tight stops in here. You might want to cut your size and expand your stops is what I would suggest. Or better yet, just sit it out and let the market decide. But what we have is a bull flag here and a very clear flagpole. Very clear flagpole from the overnight session. So anytime it drops below 46.40, remember 45.40 was yesterday's line in the sand. If it drops below 46.40, then it's likely to quickly move down into 19, which is yesterday's target, and then back to the 12, the 1175.12. Down here before we find out what their next intention is. Delta is pretty strong this morning for an overnight session. To have a delta of plus 10,000, it's a very imbalanced market. It's a market that's very much out of balance, and so that tells us that we are likely to see activity coming in across the board. So where are we versus prior action? The last time we were here is way back on November 30th. The top we put in this area was 46.50.75, 46.50.75, and here we are with a point of control at 46.50.50. So we have exceeded this. We are above the last 3 days highs already. So we're opening in a gap. We're looking for an open auction out of range. And the biggest question we have to answer today, this morning, is do we open and respond? In other words, are we becoming responsive sellers on the open? Is that who's going to be in control? So we're going to shove it back down into 46.22 and 19 for support initially. And then beyond there, we're looking for 46.12 and 46.06 for support. Or do we open, come back, and then make an impulse higher, and then we have what is called a gap and go situation, and we are back, we are up at the 73.50, the 46.73.50, which is the MC point of control in this area. Do you follow the narrative? It's really important to know the narrative so that when you're taking trades, you have a strong basis by which you are making decisions and holding trades. Here's a quick overview of what things are like. Here we're leaving the VWAP behind, the monthly VWAP behind, which just started last Wednesday. We're leaving it behind across the board. You can see that the NASDAQ is relatively weaker and is catching up, but we're leaving the VWAPs behind us a little bit. The Russell also relatively weak. The Russell's been in this downward channel for some time, and we're looking to buy support. Given how it's been responding, we're looking to buy support. Note that we have some action up here, right up here. This coincides with the 46.73 area. We have some resistance up here in this area we need to pay attention to. So I'm keeping an eye on that. You can see the resistance coming in from the left there. Let me shift this chart over. So you see that we're pulling right back into this cluster right in here. So even with the longs, I'm going to be tentative, especially since we're so close to 46.73.50. That's going to be my key target this morning. We're already very close to it. We're trading at 46.45, just about 30 points below. Close, yes, because the ranges have been pretty difficult. Here's crude pushing above its VWAP. Nat gas not seeing the light of day. Nat gas is just is likely to move back to its long-term point of control, or the most accepted price in the area, which is around $2.85 or $3. We're at looks like we're at $3.72 currently in the nat gas. So your gas bill is going to be a little bit more tolerable this winter if these prices stay down here. Let's take a look at what's expected for today. Just setting up the charts for our expectation segment. Don't want them too far back. Okay, so here's what we have for today. You all know about the St. Jude thing, right? Where is my... Oh, that's interesting. 1 second, this chart has an issue. All right. The whiteboard got erased somehow. Okay, so this is pretty tight. 2 Vala Sigma. Okay, very good. So this morning we're opening again. I'm going to draw these in. That high, that high, that high that are below us. And then we have some resistance in this area above right here. So you can see this this line here at 46.56, which we hit overnight. The expectation this morning is an open auction out of range. I'm expecting responsive selling to come in. I'm expecting some sort of an impulse back to the open, consolidate at 46.50, and then make an attempt to push higher into the 46.69.75, which is last week's high. So 46.70, and then the target is right up here, the MC point of control. Okay, so we're looking to target this area up here before we fall. So today, I'm not expecting a lot of range today. I am expecting this thing to continue to seek higher prices. We're opening in a gap higher and expecting a gap and go situation. We will likely see a pullback, but I would not fall for the pullback. The pullback has to, in order to get short on the open, here's what I need to see. I need to see the market open, make an attempt higher, and then impulse down, like really aggressively see sellers. I want to see the tape moving very swiftly through lower prices, and then I want to see a pullback that really doesn't get very much participation. Then I'm looking to short, and then the short is likely to, I would want to take the short back to 46.22, 46.19, and then yesterday's high at 46.12. And if it's not able to capture that, then we're really looking at settlement down at 45.90, which is a lot of range. So that's basically scenario 2. It's not expected to go that way, but if it does, what it will likely look like is an open auction like this, an impulse down that attempts to push higher, that fails to hold, looking for it to consolidate in this 20 area, the 12 area, and then target settlement before the bounce. So we still get the higher high, higher low. We get a movement higher in value. So we're establishing one-time framing to the upside, which we did yesterday. We're going to continue that on the daily. And then once we take out the weekly high at 56.70, we're likely to run very quickly past that, as it's likely to catch some shorts and cause a squeeze. These are the two main scenarios. Usually there's a third likely scenario, which is scenario 3, but I'll let you sort that out. Good luck today, and I'll catch you tomorrow. Take care.